Good morning, everybody. It's Tuesday, March 26th, 5:26 a.m. Central Time. Grain market's pretty quiet this morning. May corn futures down a quarter cent at 437 and a half. May soybeans down 4.5 at 1204 and 3/4. May Chicago wheat up a quarter cent at 555 and a quarter. May Kansas City wheat down 4.25 at 585 and a quarter. May spring wheat down 2 at 657 and a half. We got some more U.S.-China tensions, I suppose.
The US and the UK have accused Chinese government linked hackers of malicious cyber attacks. Both governments claim the hackers launched campaigns targeting political officials. The UK has also alleged that Chinese hackers gained access to the records of millions of voters between 2014 and 2022. The U.S. unsealed an indictment on Monday alleging Chinese hackers were responsible for cyber attacks that began back in 2010. The attacks targeted U.S. businesses, government officials, and politicians. As a result of the attacks, the U.S. government announced sanctions on Monday against hackers that it claims were responsible, and the U.K. has taken similar actions.
You never like to see China and sanctions in the same sentence because bad things often happen when that's the case. Beijing commented on this overnight. They called the Western allies move an act of political manipulation. I'd probably put this more in the camp of like a spy balloon incident rather than like a trade war incident. That being said, you've got to keep an eye on this stuff because China is such a huge deal when it comes to the soybean market in particular. So China accounts for 57% of all U.S. export commitments this year. And I updated this chart to reflect last week's data. And exports are 42% of the demand base. So China is more than 20% of your total demand base for U.S. soybeans, which is kind of scary when you think about it. If you get into a situation where tensions get overly high or another trade war type situation, China is a big deal. But for the moment, I'd say non-issue. Market doesn't care. You just don't want to see this sort of stuff escalate, but you absolutely have to keep track of it.
USDA will release its annual Prospective Plantings report on Thursday morning. Ahead of the report, traders estimate U.S. corn acreage at 91.78 million, down sharply from 94.6 million in 2023. U.S. soybean acreage is expected to rise sharply to 86.5 million from 83.6 million last year. Stocks of U.S. corn, soybeans, and wheat are expected to be larger compared to the same period last year.
A lot of people spend a lot of time trying to estimate and analyze and guess what USDA will say in this report. And I personally spend zero time trying to figure out what they're going to say in regard to acreage because nobody has a damn clue. USDA doesn't have a clue. Pete Meyer has told me on many occasions, Joe, USDA would love to get rid of this report. They know that it's not accurate. They know that they don't really get a feel for the acreage situation until June. This thing is just a shot in the dark. When it comes to how they come up with the acreage numbers, this is the survey procedure. This is a quote from last year's report. The acreage estimates in this report are based primarily on surveys conducted during the first 2 weeks of March. The March Agricultural Survey is a probability survey that includes a sample of approximately 72,900 farm operators selected from a list of producers that ensures all operations in the United States have a chance to be selected. Data from operators was collected by mail, internet, or telephone to obtain information on crop acreage intentions for the, and this year would be 2024 crop year. So acreage is a shot in the dark. You'll see changes in June. You may even see changes, post-harvest. You could see acreage changes in October or something along those lines. So this report is generally useless. That being said, the market's going to trade it. If they see something that's out of line versus expectations, it's going to be traded, which in a lot of years can be incredibly frustrating. So corn acreage expected to come down, soybean acreage expected to come up. Grain stocks should see a healthy increase. Well, healthy, depending on your definition of healthy. Corn stock should be up 14% versus the same period last year on March 1st. Soybean stocks expected to be up 8.5%. Wheat stocks expected to be up 11%. So I don't know. I mean, the stocks numbers will clearly be more comfortable or bearish versus last year. The acreage situation, nobody has a clue, but they will trade it. Be prepared for some volatility on Thursday morning.
So if you guys have not checked out our premium content, you need to do so. Joe, can you tell me about the video you put together yesterday?
Guys, just because I don't personally spend any time on the acreage report, it may be just because I'm not smart enough to do so. Maybe there's smarter people. I don't personally, I'm not bashing you guys who spend time trying to analyze acreage. Maybe I'm not smart enough to do it. My thought is that it's a waste of time. Maybe that's just ignorance on my behalf. Yesterday's video was a new crop marketing review. So what have I advised in regard to new crop corn, soybean, and wheat marketing? Ran through all the cash sales that we've advised, broken down by, in this case, the new crop marketing year, weighted averages, everything we've done, everything we're looking at in terms of sales moving forward. We've had a ton of great stuff recently on carbon scoring and biofuels. When you sign up for the premium deal, you'll see the 6 most recent premium videos as part of the first email that you get. If you sign up this morning, I'll forward you a copy of this morning's email, which goes out at 5 a.m. Central Time. We also included the most recent video regarding old crop marketing, ran through kind of how we're going to wrap up that situation. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Remember, guys, this is the best way to support what we're doing here. We have no sponsors, no corporate backing. Premium subs float the boat for us. So if you're a premium sub, we love you. If you're not, give it a shot.
Brazil's soybean harvest continues to progress. According to well-followed private group Ag Rural, 69% of Brazil's soybean crop had been harvested as of last Thursday. At this time last year, 70% of the crop had been harvested. Ag Rural also reported that the planting of Brazil's second corn crop is complete. Last year at this time, planting was only 96% complete. Despite temperatures pulling back in recent days, there is still concern over a lack of rainfall.
I don't think the forecast looks too bad. So as it relates to soybeans, what's done is done. The crop is not changing. Now the estimates will change. USDA is too high, CONAB's too low. Maybe it's really somewhere in the middle. I don't know. But that part of the market and the growing season is largely behind us. What we're going to look at now is this second corn crop. And there are some areas that actually saw some flooding over the last week or 10 days. It's very isolated, though, and it's not enough to really get the market excited. I think the forecast looks decent. I mean, this is just the next 5 days I've got on my screen here, and you're talking some decent rainfall for almost all of Brazil's second corn area. So I think that the forecast is mostly benign, and you're seeing that reflected in the corn market, which has been largely inactive.
U.S. corn shipments declined last week. USDA reported that 49 million bushels of corn were inspected for export during the week ending March 21st. The print was down 7.4% from the previous week, but up 78% compared to the same week last year. Soybean shipments increased to 28 million bushels. The print increased 9.8% versus the prior week, but was down 14% compared to the same week last year. Wheat shipments were reported at 12 million bushels, down 20% from the previous week and down 22% versus the same week last year.
Corn shipments are probably on pace to hit USDA projections. That being said, I think a lot of what happens with the corn export program here the next few months and into the new crop marketing year will depend on the Brazilian corn crop. How good is it? And does Brazilian corn end up at a steep discount versus the United States? U.S. corn's pretty cheap. I don't know if I see that happening necessarily, but it's a possibility. Soybeans, we're not where we need to be right now. That was a better shipment number versus last week, but down versus the same week last year. I wouldn't be shocked if USDA came down a little bit more with their soybean export projection and also with their wheat export projection, which wheat exports have been a problem as well.
It appears that China is turning to gold as a secure investment. As the country continues to face economic uncertainty, both the Chinese government and its people are heavily investing in gold. Last year, China's central bank purchased more gold than any global central bank. Gold hit an all-time high last week when it surpassed $2,200 per troy ounce. The spike was attributed to the Federal Reserve reaffirming its plan to cut rates 3 times this year. Although Chinese demand for gold is unlikely to drive global prices higher, it could act as a buffer against any downturn.
The People's Bank of China bought more gold than any global central bank last year, purchasing a net 225 metric tons. That was China's biggest expansion of gold reserves since 1977. China imported 367 metric tons of gold for non-monetary use during the first 2 months of this year. That's a 51% increase from the same period last year. This was the best chart I could find of this early this morning. This is Dan Popescu on Twitter. He posted this. So this was China U.S. Treasury holdings versus China gold reserves. And the trend is very clear. Gold reserves continue to increase and have been increasing pretty steadily since 2000. They'll go 4 or 5 years without really doing much, and then they'll start buying, and that's kind of the cycle we're in right now. And they've been reducing holdings of U.S. Treasuries sharply, and I don't know if that's a vote of non-confidence in the U.S. dollar, which is kind of a popular opinion right now. I don't know what it is, but it's interesting that China's loading up on gold and drastically reducing their holdings of U.S. Treasuries. You guys tell me what you think that means. I don't really know. What did cattle do yesterday?
They were lower. Feeders closed an average of $1.60 lower. Live cattle closed an average of $1.09 lower. Box beef was mostly unchanged on Monday. Choice ended the day at $310.89. That was up 17 cents. And Select ended the day at $301.96. That was up 49 cents.
Outside markets mostly quiet on Tuesday. U.S. dollars off just a little bit. Stocks are higher. Bonds up just a little bit. Crude oil is down 30 cents in the May WTI 81.64 last trade. Have a great day, guys. We'll talk to you on Wednesday.